Welcome to Megabucks Radio. Conversations with successful entrepreneurs, sharing their tips and strategies for success. Real-world ideas that can put Megabucks in your bank account. Here's your host, Nina Hirschberger.
Well, hello there. This is Nina Hirschberger, and welcome to today's show. Whether you invest in a 401k, an IRA, Roth, crypto, whatever investment it is, sometimes we wonder, how can we invest for a safe, consistent return? I'm excited because my guest today is Mark Yegge, and he's called the Wealth Advisor, Wealth Architect. I'm sorry, not a wealth advisor, a wealth architect. So he is much, much more than just an advisor. In fact, we're going to get started with this because he started when he was 12 years old, and I got to hear that story. But he's traded over $14 billion worth of securities, and he is on a mission to change the way we invest. So, Mark, welcome to today's call.
Thanks, Nina. So happy to be here.
So let's go back about 2 years ago when you were 12 years old, of course. Tell me, how did you get started in investing and why?
Yeah, that was really 4 years ago, but thank you. When I was 12 years old, my dad taught me early on to be a hard worker. So I would always mow yards and clean pools. And my dad would read the Wall Street Journal. And finally one day I was curious as to what he was circling when he was looking at all those symbols on the pages. And he sat down and he started to explain you can actually invest in other people's businesses. And I was kind of fascinated by that. And I put $300, all my earthly possessions, $300, right, into a stock called Aileen. I bought 100 shares of this women's clothing company at $3 a share. And lo and behold, over the next 6 months, it went from $3 to $6. And I thought, boy, this is a really easy way to make money. I just doubled my money. And so I sold it because he kind of coached me on selling it and taking a profit. And then I did it again. I found this company called Allegheny Airlines that was changing its name to U.S. Airways. And I thought, well, U.S. Air, that's a kind of a cool name. And I bought that at 17 and it went to 35. And I'm like, oh, my God. So this is probably the worst thing that could have possibly happened. I got two doubles in a row, right? And I was kind of hooked. And so all through college, all through high school, I learned how to trade and I kept getting better. And then I had my own brokerage firm on Wall Street and yada, yada, yada. Here I am today with a couple of hedge funds. And then I teach people how to invest and create safe, reliable income. It's really what I'm all about. It's financial education.
Well, before we started the podcast, I just looked at the Dow is down over 400 points. Last Friday was down over 900 points. So, of course, anybody that is investing could have some concern right now. So let's talk about how can you do it and have a consistent 2 to 4% a month is what you're saying, no matter what the stock market is doing. So let's get started in that.
Yeah, and I'll give you an idea. I mean, the stock market here we are at the middle of the second quarter of 2022. This is the worst start to any year since the Great Depression, 1939, actually. And so we are, and it's not like it's unexpected, but, when you cry wolf for 13 years and say the market's at a top, pretty soon people quit listening. And here we are now where people should have listened. And if they didn't, some of their stocks are down 50, 60, 70%. And there's some real pain out there. In our program, a lot of the people have actually made money this quarter. Most people actually have. We made money in our hedge fund this quarter. And there is a way that you can take an asset and you can create income from it. And so the best way, if you give me a little leeway, I have this little analogy that I like to use, because most people can understand real estate a little bit more than they can understand a stock, right? Because a stock's a little bit intangible. But a real estate, you can kind of touch the walls and you can live in it, and, we're all familiar with it. But imagine that you open your front window and you look across the street and your neighbor named Jim, let's call him, has got a sign out on his property, and he's got his property for sale. It's a big vacant lot, and he's got it for sale for $100,000. That's what he thinks it's worth. And there's this guy driving down the street that heard a rumor that Hilton was going to be building a big resort right next to Jim's lot. Let's call him Bob. So Bob's driving down the street and he sees Jim's sign, for sale, $100,000. Problem is Bob doesn't have $100,000. So what he does is he goes to Jim and he says, Jim, listen, I don't have the $100,000 to give you right now, but if you'll take the property off the market for 6 months, I'll give you $10,000. And the only thing you have to do is agree to not sell it to anybody else except for me. And if you sell it to me, I'll give you the $100,000 that you want right now. And he says, Jim says, wait a minute. I got this property for sale for $100,000, but you're going to give me $10,000 and I get to keep that no matter what. The only thing I have to do is not sell it to anybody except for you for the price that I'm already asking. And Bob says, yeah, that's all I'm asking. They shake hands, they make a deal, they write up a little contract, and off they go. Now, two things can happen, Nina, right? The first thing is that Hilton comes in and they make that announcement and the rumor was true, and now that lot is worth $1 million. And Bob just took his $10,000 investment and he turned it into $1 million investment, right? Big reward, cost him only $10,000 to get into that trade, but he made a huge amount of money on the trade. But you and I both know that information is imperfect and rumors are often not true. And so nothing happens. Let's say Hilton doesn't come in and give him that offer, right? And that $10,000 that Bob gave to Jim expires worthless. Like he's not going to buy it for $100,000 because first of all, he doesn't have the money, and second of all, he didn't do what he expected to do. So let's analyze both positions. The first position is Bob's position, the guy driving down the street. He invested $10,000, but he lost it all. Now, he had the potential to make $1 million on it, but he lost it all. So he had high risk, high reward. Jim, on the other hand, still owns the property, could still sell it for $100,000. The difference is he got to keep an extra $10,000, which basically lowered his basis from $100,000 to $90,000. So he made let's call it a 10% return in this case. Does that make sense? Makes perfect sense. Okay, so you can do this in the stock market. Most people don't realize that if you have a stock, and it's got to be the right stock, we always call it the four cornerstones of our system. Our system is called the cash flow machine because you put money in and then it starts to spit money out is basically the analogy. But the idea is that you buy the right stock in the right market. And right now, I don't think we have the right market. But the right stock, the right market, at the right spot on the chart, because there's a high probability spot on the chart that gives you your best chance of making money. And then we do what's called collecting the rent from the stock, or we call it internally squeezing the juice. And so if you have the right stock, let's say you own some Amazon or maybe some Tesla. We're big in Tesla right now. That's most of our investors have a lot of Tesla. And it's a good stock. It's going up. The electric car movement is good. It's got all the good fundamentals, high growth, higher earnings per share, those kinds of things. So it falls into our criteria of the right stock. There's a few other things that we look at as well. Then, do we have the right market? Well, right now, we have what's called a red market. So we're encouraging people to stay in cash right now or to be extremely protected. And there's a way that you can protect and still make money. And then we try to find the right spot on the chart. We usually look for a breakout spot on the chart where the probabilities are that the institutions are going to drive the stock higher. And then we collect that juice. We find the gambler, like that guy, Bob, that was driving down the street, that was willing to gamble that $10,000. Now, you can find options on Tesla, options on Amazon, options on Apple and Microsoft and Google and all these great stocks. And if you get them at the right spot on the chart, and they are the right stock, you can find a gambler that's willing to give you money to be able to take that stock away from you at a predetermined price before a predetermined date, just like that guy Bob was willing to do with Jim. And so we kind of look at it like renting stock. So if the market goes up, the market goes down, we're always finding that gambler to give us that money. We're the house, and there's the gambler that's helping the house build those beautiful casinos, right, if you want to use the Vegas analogy. So statistically, 80% of all options that are purchased, like that guy Bob driving down the street, he purchased the option for $10,000. 80% of the time, those lose money, but 20% of the time they make money. But if you flip it, there's another person on the other side of that trade. The person who sold the option to Bob in this case, and that was Jim, he makes money 80% of the time, or roughly, something like that. But his probabilities are much higher that he brings in that money every single time by finding that gambler out there. So that's what we do. We shoot for about a 2 to 4% a month conservatively, and that allows us that in these markets where things are going down, we're deeper in the money, and we get to collect a little bit of rent, maybe not as much as when the markets are going up, but that protects our downside because we create income on the downside to protect.
Yeah, that makes a lot of sense. Actually, many years ago, I did do some stock option trading. I would be out of my positions on a daily basis.
Wow.
And but by the time I was going to say okay, bye, my hand was shaking, and I said, "Oh, this is not for me. I don't have the strength mentally to be able to do that." So I doubt that I'm alone, because it sounds like what you're actually were describing is something like what we would have called a covered call. In other words, you own the stock, and you can sell that call, or a put if in the case. So do you handle all of the stuff for your clients, or how does that work?
So let me unpack a couple of things that you said. First of all, you're spot on 100%. It is a covered call program, and you can go on YouTube and you can pull up 100 different videos on covered calls, including mine, right? And so covered calls they're no secret. They're known as a conservative strategy on Wall Street, and they do work. The problem is I've never really seen a system built around covered calls, something that gets you, using those 4 cornerstones, the right stock in the right market at the right spot on the chart. But it also doesn't tell you, I haven't seen a system that tells you, okay, when to be out, when to be in, what happens if the market goes down, what happens if your stock goes down or up or sideways. And I want to go back to your handshaking when you used to do those trades, because that's because you had emotion. And money equals emotion, right? We work really hard for our money. We want to make sure that we do the right thing with our money. We want to make sure that we're good stewards of our capital and we're making good returns. But then when we have to make some of those decisions, if we get emotional about it, well, you and I both know that the more emotional you are when you're making a decision, probably the worst decision you're going to make, right? I always say emotions go up and intelligence goes down, and vice versa. So what you want to do is you want to strip out the emotions from any kind of investing, whether it's a real estate investment or a stock market investment or a cryptocurrency investment. You want to strip out those emotions, because then you can make a more rational decision. Well, how do you strip out emotions? What we've discovered is that if you have a set of rules, and they're proven rules, you can make a decision very unemotionally. It's basically a flow chart. If this is doing this, then do Y. If Y does this, then do X. And then you can make a decision based on the way that flow chart sets up. And when you do that and you have a set of rules, it's a lot easier to make that decision because you're not using emotions to guide it in your buys and your sells, right? And so the second part of your questions was do we do this? Yes, I have 3 hedge funds. One is closed. One does this exact strategy using the cash flow machine methodology. Another one is a cryptocurrency hedge fund. And yes, we do this for people, but a lot of people either don't qualify or they've been so burned with their broker or so jaded with the markets or Wall Street that they want to do things themselves. And I can tell you, I sit behind a computer all day long and I look at numbers, but we have this thing. We have a mastermind program around the cash flow machine, because we have courses, but we also have a mentorship and mastermind program. And on Friday afternoon, we all get together at 2:00 on a Zoom call. We look at each other, we share screens, we share stories, we give each other advice. I have the most fun that hour of the week than I do any other hour. And we also get the most results because we're all there making each other accountable, supporting each other, encouraging each other, talking about the stocks that we're doing and learning from each other at the same time. So, I either do the hands-off approach by, running a hedge fund for accredited investors, or if you want to learn how to do this hands-on, we have programs and a mastermind program that you can also do. It's easy to learn. It's just a bunch of rules. And once you get them, then you start to dance with the rules.
Well, when I did it was, probably 20 years ago. But now, fast forward 20 years later, and there's a lot of computer assistance out there. So even if you know the rules, is there a computer that helps you? I mean, I would sit there, I would have CNBC on my left. I'd have two monitors, one looking at the candlesticks. Is that how, was that candlesticks? Am I saying that right? It's been so long now.
Absolutely. Yeah.
And the support and all of that kind of stuff. And so you're right. It was all about emotion, which was not for. But now, is there computers that help do all of this kind of stuff?
Yeah, I mean, there are, and you're so funny the way you describe that, because you probably described 95% of the way people trade, right? And if we know anything from the last couple of years, we know that the TV is set up to steal our attention, right? With headlines and everything's breaking news. And CNBC is no different. Like, you're watching Cramer. He's an entertainer. He's not a great stock picker, but boy, he's fun to listen to. And then, that leads into that emotion. And, you buy at the right stock at exactly the wrong time or something like that. So, yes, that I always shut off the TV. In fact, I never turn on CNBC anymore because it just gives me the wrong information. And the funny thing is, you can have a guy from Yale and a woman from Harvard with, really highly educated economists giving the exact opposite opinions about the same stock. So that neither one of them really either knows what they're talking about because there's no certainty there. But yes, the computers have taken over Wall Street. And, it reminds me of a few years ago, after I sold my Wall Street company, I thought I was going to be this big fancy trader, and I was going to program all these computers to take all my algorithms and trade them for me. And it's really amazing, Nina, that when you program things in, it always works when you're back testing it. Like, you're going to be rich and you're never going to have to worry about money again. And then when you actually put real money behind the computer algorithms, it doesn't seem to work so much. And then you spend all your time tweaking it. You don't really get too far ahead. So we've simplified the methodology to, there's a lot of rules in our system, maybe 35 rules. And we've simplified it. Once you learn them, they all kind of work together. But if you rely on a computer to do it, I don't think you're going to have the success. I've never seen anybody be able to have the success. And I was on Wall Street. I knew all the quant trading companies and all that. But when you actually have a system that just doesn't shoot for the moon, we only make 2 to 4% a month. But if we make 2 to 4% a month consistently in bad markets and good markets, if you do the system right, that outperforms all these algorithmic, fancy schmancy quant trading computers and all that kind of stuff. That's what we found.
Well, that's what I was trying 20 years ago, because I would get out of a position, is because I just wanted that little bit. I didn't need a home run.
Yeah.
Base hit was really good. Just a bunch of little base hits where it was, it's just, So when you say about 35 rules and you guys really, and shut off the television, which I totally 100% agree. I haven't watched CNBC since then. In fact, I don't watch any news. Haven't for about 40 years. So you actually just do most of this manually then, knowing the rules.
Yeah, it's actually manual, but it's really not hard. We tell people when they're getting into the system that they could do this system with about 20 minutes a week or an hour a month. Now, a really funny thing happens because, like I told you that statistic that about 80% of the time when you're a seller of options, you're in the money. You always get the rent, right? You always collect the juice, we call it, right? That always happens 100% of the time. It's now whatever happens with the rest of the stock that's part of what you deal with. But if you're just focusing on this system, you can do it in 20 minutes a week. You buy a stock, you sell a call against it, and you go play golf or you go to the spa or you do whatever you want to do, right? But people get addicted, right? Because the screen turns green a lot more than it turns red. And so you start to get addicted and you want to try to tweak it. You want to put your own spin on it. And sometimes it gets really hard for people to walk away. I laugh at people because I was one of them that is always trying to mess around with the trade. It's like, just leave it. And then on Friday or monthly, it will just do its thing and put money into your account. But people they just get enamored with it. And then that brings them a little bit more closer to that emotional part of the decision making. So that's why we have the rules. Even some of our people that have been in our program for 2 years still find themselves kind of driving by looking at the headlights right in front of the car rather than down the highway, which I think is funny.
Yeah, and the worst thing that can happen is they buy the stock from you at a higher rate.
Well, that's it. That's it.
So you made money on a call option, and you made money when you sold the stock.
100%. You can't make any more money than if the stock is above your strike price. That's your maximum gain. And if you can just do that over and over and over again. Now we tell people that it's a 2 to 4% a month return, but we also have a lot of people that use weekly options. It's a little bit different than when you first started. And they only had monthly options. Now they have weekly options, which give you so many more opportunities to take another bite at the apple during a month. So a lot of people, that's why they're kind of glued to their screens. They don't have to be, but they choose to be because now they're using weekly options and there's a lot more opportunities to make money.
So, Mark, are you seeing people that are actually making this their full-time way to make money and don't have a job besides or a business besides?
Yeah, I mean, I tell people that this is a way to replace their income, retire early, and create safe, reliable income. Those are kind of the taglines we use. But most people don't really believe that you can make 2 to 4% a month. I mean, it doesn't sound like something that's consistent. And I can tell you, I've been doing this off and on since, for 45 years. And I can tell you that it is absolutely doable. I have results up on some of our web pages that show much higher returns than that. And I'll just give you a story. I've got several physicians in my program, and one of them, and I didn't know this about physicians, but a lot of the physicians that I seem to run into are just unhappy with being a physician. They love to help people, but they just hate the politics at the hospital or with their group, and they just can't wait to get out. And that to me, that was surprising. Why would you go to school for so long and then get in there and want to get out? But a lot of people in my program they set goals at the beginning of the year, and I couldn't believe it. This year, 2 of them said, I want to be out of medicine by the end of the year. And these are guys in their late 40s. These aren't like 65-year-old doctors. These are guys in their late 40s that are so tired of medicine, they want to be out, and they think that the cash flow machine is their vehicle to make it so that they don't have to work again. And they're following it up with their results, which is really amazing. Makes me happy.
Okay, so where do you trade your money? Do you trade it in a Roth? Do you trade it in an IRA? Or do you trade it outside of those vehicles?
Yeah, any of those vehicles are great. Since we are doing weekly and monthly options, we generate a lot of short-term capital gains. So ideally, if you can be under the shroud of a tax-deferred account like an IRA, whether it's a Roth or a regular, or some kind of a tax deferral, there's several different other ones. That's the best place to be because you won't have to pay taxes. I have an IRA, and I don't usually say this on a podcast, but I don't know. I feel comfortable with you, Nina, so I'm going to tell you. I got so many people challenging me on this that you can't make safe, reliable income at the rates that I tell. That I set up. I took one of my IRAs because you asked me about the IRA. It's the only reason I'm telling you. I took one of my IRAs. It was this small IRA at Charles Schwab. It was $111,820 on April 30th, 2020, right at the beginning of the pandemic. Okay? So remember that number. It was $111,000. I only have done my cash flow machine methodology in 2 stocks. Netflix for the first 3.5 months, and then our indicators show that we should switch to Tesla, and I've only done Tesla ever since. And here we are. It's just finished April 30th, right, of 2022. So 2 years later, the account is worth about $700,000. And that's, if you do the math, it's more than 2 to 4% a week. But that is, and I put the results up on the internet so that people can see it. I black out the account number, of course. But it is doable, and it's very doable inside an IRA because the tax man doesn't get a hold of it. Now, unfortunately, when it's not a Roth, so when I actually cash that out, I'm going to have to pay a big tax bill to Uncle Sam. But that's okay. There's worse problems in life than paying taxes.
Well, and your 40-year-old physician, he can't pull it out of an IRA or a Roth, so right. he's got to take it as a normal income. Yeah,
if he wants to pull it out, you have to have it in an IRA for 5 years if it's in a Roth, or be 59.5 to be able to start pulling it out. But you're up. But that's the best place to compound, and it doesn't sound like much, 1 to 2% a week, 2 to 4% a month. But when you start to build on this is why Einstein called compounded interest the eighth wonder of the world. You start to build those little wins on top of each other. And if you don't go backwards, and of course we don't make money, every month or every week, if you don't go backwards much, those little wins, like you said before, those little singles, they start to really add up. And the account starts to have this crazy looking graph that goes almost straight up. It's almost too good to be true, but I can tell you it's true. So I'm really proud of what we've been doing.
Okay, so talk to me. You said a few minutes ago that this was the worst start of the year in the stock market since the Great Depression.
Yes.
Are things changing then because of that? Is this the wrong time? So if you want to get into what you're saying, is this the wrong time to do it?
Well, I wouldn't encourage that if you're going to do your first trade using a cash flow machine methodology, that you do it today. Because right now right now we're down 300 points, 400 points. Actually, we've bounced since we started this call. We've bounced almost 400 points. Isn't that amazing?
Oh, that is amazing.
So that's just the craziness that's going on in this market, and we like volatility in cash flow machine because the more volatile a stock is, the more premium we get. In other words, the more rent we can collect. But I'm getting off the subject. We do have an element of timing the market in our program, and we have red, yellow, and green markets. And when the green markets are there, that's the best time to really put the foot on the accelerator. When it's yellow, you kind of take your foot off the accelerator, and when it's red, you put on the brakes. Right now, we're screaming bloody red. But you know what? After every winter, there's always a spring. And so I don't know when the spring is coming. I have a feeling that the Fed is going to be tweaking interest rates for quite a bit of time here in 2022, and I think this is their experimental year to see if the markets crash or if they don't. And so I wouldn't this week probably put money in, but there's going to be what I call a rip your face off rally that happens in the next few days or few weeks, and you got to be ready. So we always tell our people, get your watch list ready, so that when the day happens that you get a green market or a fertile yellow market, you can go ahead and start investing, and then you get the probabilities on your side. We like to have the wind behind us, so we do use a bit of market timing, which does give us a bit of probability, not a lot, not 100%, of course, but that wind in our sails, filling them up from behind, is a lot easier than trying to go into the wind, and so that does help us.
And you find that out by looking at your 35 rules. So what is there, some of the fundamentals, I suppose.
That's right. So we do have to find the right stock, and then we put that on a watch list. And so we're always watching and ready to pull the trigger when we need to. And then we have to have the right market. And we use a system of moving averages and momentum indicators, which are past measurements for sure, but they kind of give you a probability. Look, the selling is out, and now the buyers are coming back in. You can kind of see it on the charts. And when those markets turn green, when you buy a stock, you have a 50% chance of being right. And so does the other person on the other end of the trade, right? And a lot of times they're pretty smart, maybe even smarter than you. So what do you do to get that 50% in your favor? Well, there's certain things that you need to do. You need to buy stocks with high earnings per share. You need to have stocks with high sales growth, high return on equity, all those kinds of things. And then the markets have to be fertile, and the sellers have to be purged. And that happens during these rough times during the market. I mean, a 4-month decline in the market of 21% is pretty rare, but that also means that you're getting a 21%, managers gone insane sale on the stock market. And so that when things start to go up, it's a lot easier to make money. And so that is a big component, and that is part of our rules in our system as well.
So your people are probably watching it really carefully because they know the sale is coming.
Yes. And what's really funny is the times in the market that you're the most scared is probably the time that you should be the most brave. It's an interesting phenomenon, Joe. I get to watch this very unemotionally with dozens and dozens of people in my mastermind groups and that take my courses. And the chatter picks up, and we have little chat groups that we have, and the chatter really picks up when the markets are going down. And we have certain rules that say, hey, when the market goes down this much or your stock goes down this much, that's the time to buy or to buy a little bit more. And then when the market turns green, there's also another signal, like to initiate a new position or to add to an old position. But the fear really picks up. And when that fear picks up, I feel it. And I can also tell you that we're really getting close to a bottom when that fear level picks up. It's a strange thing.
So do you call that dollar cost averaging? Am I getting that term right?
Yeah, you're getting the term right. We don't really do that because that's a system. So what a lot of people do is they use a buy and hold strategy. I call it buy and hope, right? You buy a stock and you hope that the market takes it up. And, you're generally right over 100 years. If you got that long of an investment horizon, the market's gone up about 9.4% over the last 100 years. Or you can look at it that the dollar has lost 99% of its value over the last 100 years, depends on how you look at it, the numerator or the denominator. But if you're doing that, then you can dollar cost average. You just buy every time there's a dip. Well, right now we're in a bear market. And if you're buying on the dips, you're buying during weakness and things are going down during those dips. You don't know when the dip is going to stop. So what most people are doing right now in these markets, the big institutions, and that's who we follow, they're selling the peaks. So as soon as there's an uptick in the market, those institutions are using that as an opportunity to go to cash and sell those peaks because they see some weakness coming. Now, when does the weakness end? I don't know. It could be tomorrow. It could be 6 months from now. But it will end, and then the market will go back to its inevitable climb. And there's some deals out there. But generally, we're going to pick one or two stocks, and we're just going to rent those stocks out to investors that want to give us money, and they want to gamble more than we do.
So your point is you're not following. So I think of mutual funds as being a whole gamut of stocks.
Sure.
And what I'm hearing you say is if I'm one of your mastermind members and taking your courses and all of that kind of stuff, that I have a very limited number that I'm watching. You talked about your IRA, and first it was Netflix and then it was 100% in Tesla. So you're not watching lots. You're just watching a few.
You're absolutely right. Boy, you got some great questions. And I'm looking at this account in front of me as we talk. It's a $3.5 million account. I have one stock in it. It's Tesla. And I know that sounds crazy to most people, but if you talk to Warren Buffett, it's not so crazy. Warren Buffett believes in concentration within asset classes and diversification among asset classes. So I believe that we should all have some income producing real estate. I believe that we should have some technology assets like Bitcoin, possibly. I believe that we should own, part of a business, whether it's through stock or our own business. I believe that we should have a cash cow, whether it's our own business or our job. But I also believe that you can create safe and reliable income from the stock market. But if you diversify among 500 different stocks, like a mutual fund would do, all you're doing is shooting for average. And I don't know about you, but I didn't wake up this morning going, I can't wait to be average today. And so if you just pick out the cream of the crop, instead of 500 stocks, maybe you got 5 or 3 or 1. Actually, I am short Amazon in that same account now that I look up at the screen. But there's just 2 stocks in that size of an account. And that's what my mentors taught me. They said, look, put all your eggs in one basket, but just watch that basket really carefully. You can't watch 500 stocks. You just can't. It's physically impossible. You can't know when they're having earnings. You can't know when the CEO, dies in a plane crash, or when they, have an accounting fraud thing come up. You can't follow 500 companies, but you can follow 1 or 2. And you can, if you know those companies really well, then you can use those to create good income. And we've proven it.
Do you find your people in your mastermind, are they all kind of following the same stocks? Or?
Yeah, it's actually funny because so last year we were in several different stocks. Off the top of my head, we were in a stock called Freeport-McMoRan, which is a gold and copper miner. We were in Tesla. We were in Amazon. We were in NVIDIA, and maybe we were in Apple. So those are the ones that tended to be followed. And most people just started to see the results. There's certain ratios that we use when we set up our rules that Tesla happens to, at least right now, be paying the most amount of rent for the amount of money that you put out. And so that has really drawn people to follow Tesla. So almost everyone is at least in some portion of Tesla in their account. So Tesla, I would say Apple, there's a couple of other ones, but mostly, most people start to gravitate because we're all talking about the same stuff. And people get FOMO. They have fear of missing out. They don't want to be left out when everybody else is making a profit. It's really cute, actually.
Well, Mark, this has been a fascinating. I mean, I look back 20 years ago and I was all by myself, and man, would it have been nice to have had a group like you. There's a real high probability that somebody listening to this podcast might be the kind of person that would say, I need to know more about that guy. I need to know more about his system. I need to be part of his mastermind. I always ask this at the end of every show. Do you have an offer, a special thing that you would like to offer the people listening?
I do, and thank you for allowing me to do that. And my goal is to educate the world. So if you just learn about what we do without coming over here and investing with us, that's great. Because I think we spend more time learning Shakespeare than we do about how to handle our money in high school and grade school. And we know a lot about the Pythagorean theorem, and we know a lot about Romeo and Juliet, but we sure don't know a lot about real estate and the stock market and handling our money. And we use money every day. We should really learn a lot more. So my message is financial education. So I've set up a page for the listeners of this podcast, for your podcast, this episode, and it's go.destinycreation.com. So that's go.destinycreation.com/Nina, Nina. So if you put that in, not only will we have a copy of this podcast in there, if you'll allow us to put it in there, but we'll have some notes, and we'll also have an offer called regular paychecks. It's basically how you can take a regular paycheck out of the stock market. And by the way, like you said, this isn't for everyone. This is for certain people. And I guarantee in my mastermind program, we have and it's an investment in yourself, but it's also an investment with us. I guarantee that you make that investment back, or I give you your money back. So that's how strongly I believe in what we do with the cash flow machine. And I've never had to give anybody their money back. So I don't want anybody listening to be the first. How about that?
Well, that's an amazing offer. Do you have a certain kind of person that this would be best for? Do they have to have a certain amount of money? Tell me a little bit about that.
Well, yeah. I mean, the cash flow machine is a methodology that's based around a series of courses. So we have 3 courses. We have a course called the Fast Launch course, where you can just kind of dabble in it and get to understand it with a couple of rules so that you see if it works. But really our main course is called the Cash Flow Machine Elite course. That's in the middle. That's designed to be about a 6-week course with about 70 to 75 video modules. You get to see a lot of me, which may or may not be good, depending on whether you like me. And then we have something called the Advanced program, which it's called the Platinum, but I don't even unlock that unless you've been through a few cycles of the market so that you know how to handle your own emotions and you can make the right decisions. So there's the courses, but our mastermind is really a full ecosystem with a mentorship from me based around the courses. So the courses are part of it. Certainly in the beginning, you have to learn the vocabulary, the rules, all those things. I'm holding your hand, helping you do your first trades, set up your account, understand why people are doing things the way they do, why we do things this way and that way, and holding you basically accountable to your own rules, by the way. And then we have our calls on Friday. We have a chat group. We have something called the private access group where I actually put out the trades that I do in my hedge fund as I do them, so you can see what I'm doing and why I'm doing them. And so that particular ecosystem, that mastermind group, this is a long answer to your short question, but that is an investment. And for that, you're going to need to have about $150,000 to maybe $2 million as a minimum to really do it right. And the reason is because there are a lot of stocks that we do, like Tesla right now is a $900 stock. You need 100 shares to buy one contract, right? So to be able to sell one contract against your position, you have to have 100 shares. Well, $900 with 100 shares is $90,000. But you're not just going to do 100 shares. You have to be able to move that around a bit. So you'll need a good amount of money to be able to get started. And then once you get started and it starts to grow, then that's super. The courses are great if you don't have that kind of money to start, and that's great. And then the mastermind, obviously, you can find out all that information when you go to our website.
Well, what a fascinating call, Mark. I appreciate you coming on the show today. I certainly have learned a lot. I'm going to go to that and see what you have. And because it was fun. It was, I do miss it a little bit. I have somebody managing it, but it would be nice to take it back. So anyway, we have come.
Yeah, I was going to say, thank you for having me on. And by the way, I want to give you a compliment. You have such a wonderful breadth of people that talk about financial education and different ways of making money on your show that I really appreciate what you're doing out there. So keep doing it. Don't quit. Keep it going. I love it.
Oh, well, thank you. Yeah. In fact, I bring people on, because usually I'm all about marketing and business and stuff. But I do sprinkle in a few other little people like, some physicians and stuff. But I appreciate you saying that. I really do. So this is Nina Hirschberger. Until next time, go out and find maybe that one stock that you want to pay attention to. And, of course, go get Mark's free offer that he's given. Until next time, make it a great day.
Thank you for listening to Megabucks Radio with Nina Hirschberger. To learn more about the resources mentioned on today's show or to listen to past episodes, visit megabucksradio.com.